Welcome back, Better Investors, to another episode here on the BI Academy channel. And I'm super excited to have once again with me Chris Naugle. Thanks so much for being on, man. It's been a lot going on inside the economy, inside the world, globally since the last time we talked. So give me a little bit of an update on yourself. What's going on with you?
Well, I mean, the worse it gets out there, the better it gets in here with what we do and, teaching people how to take back control of their money. So the worse it is out there, the more people want to take back that control and they want to learn how to be the bank. So, we're busier than we've ever been. We live in a beautiful world that, when everything's crazy good out there, things are a little slower in here. Like when the markets are rallying and we're witnessing the longest bull run in history. I mean, we're busy, but we're not crazy. But then when everything starts falling apart, people start dealing with hyperinflation and Fed action raising rates and everything that's been going on over the last, we'll call it 18 months. It's just made it crazy. So I'm blessed, just blessed to many, how many years? I was actually over a decade ago to have that idea planted in my mind about the infinite banking concept. And here we are, we're still living the dream.
Yeah, what you said was key there. You were talking about how the way you described it is kind of like gold. Nobody's like, oh, it's dead money, whatever the case is. Nobody really wants gold or silver until like everything hits the fan, right? Until like you really start to see the cookie crumble. It's like, oh, I think that I might need to go get some precious metals because those are the only things that's actually holding value and increasing against inflation, whereby other assets can actually go down, even with the inflation of the dollar. So that was cool, man. What we do, of course, is help people become their own bank, which is whole life insurance designed to work as a bank. I think that's one of the main functionalities that people miss out on. They want to know, okay, why haven't I heard this on a commercial? Why haven't I heard this at HR or somebody at work? And it's simply put, it's because it's about you becoming your own bank through whole life insurance, but whole life insurance is simply the vehicle. Now we have to add the specs, right? Do we want heated seats? Do we want powered windows? So on and so forth. And I think that's the key difference. So if you're somebody out there listening to what we're talking about, that is the key difference of why you haven't heard of this before. And here's actually the book here, Become Your Own Banker by R. Nelson Nash, the 5th edition. He's breaking down how that policy is going to be structured differently from a traditional whole life policy. So going past that is, Let's dive into the market. So you're always doing your weekly market updates and talking about that. We talked about the three Fed decreases that they're going to be doing in the interest rate. What do you see that happen? When do you see them actually pricing that in and starting to do that? And what do you think it's going to have in terms of the effects on the market?
Yeah, let me just kind of give the audience a little bit more of a kind of snapshot. As you know, during the pandemic, there was a lot of money printed, about $5.2 trillion. And that money was injected through the central banking, through the government, and in the hands and pockets of many Americans, including business owners in America that were suffering from the pandemic and the shutdowns. And when that all happened, it drove several things. Number one, it gave people disposable income that they weren't used to. They couldn't spend it because they really couldn't leave or do anything. And not only that, businesses were all shut down and supply chains were pretty much just seized up. And when everything opened back up, people had kind of emerged from the pandemic with newfound money, much lower debts, because during the lockup, most people were paying debts down and saving more money than I would say than they have in most of their life. And then when it opened all back up, it was like a feeding frenzy. Everybody wanted to go out. It was revenge of 2022 and revenge of 2023. I mean, it just kept on going, and people spent and spent and spent, bought all the new things. Way overpaid for them because obviously supply and demand. And because of all this new money, because of all this demand, the thing called inflation rose its ugly head. And to be expected. I mean, that's just what happens. But the Fed didn't acknowledge it. The Fed said, oh, it's transitory. And then they said, oh, it's not as big of a deal as it's going to be. And then they're like, oh, it's a really big problem. Oh, now we need to slay the dragon. And that led us to here with, many rate increases last year. We've gone from a rate of it was zero during the pandemic, zero, to now in the Fed rates. Now, it's not the rate that you pay on your mortgage or your car loan. This is the Fed rate, but it basically is 5.25 to 5.5. It's kind of a range. So if you think about it, that's a monumental increase. But what people need to understand about rate increases, and the Fed hints this all the time, is that when the Fed raises rates, there's usually a 6 to 9 month delay before it even hits the economy, before we even feel it. So when the Fed raised rates, we're not going to feel the impact immediately. It takes time for it to cycle in. So now we're just, for the first time really, end of 2023, but more specifically first quarter 2024, where we're starting to feel some of the pains, I guess you would say, of the rate increases. So now, when the Fed came out last time, or Jerome Powell specifically, because some people on the Fed actually came out and openly said that was irrational, it was uncalled for, he shouldn't have said that. He didn't say that he's going to decrease rates 3 times in 2024. I know a lot of people hear what they want to hear, but he said he essentially kind of like opened the door a tad, right? He cracked the door and said, we might decrease rates.
Yeah.
We want the door to be cracked open. So it was really just a hinting that we might decrease rates. And as you know, after that, the market heard what they wanted to, and they freaking went nuts. Now, the markets are very efficient, stock market, and the market builds a lot in. And one thing you have to understand is when the Fed says 3, the market built in 6 rate decreases. And when you're really trying to pinpoint the number, it's usually the Fed will usually go a little light. The market will over exaggerate a little bit. So if the real number is probably 4 to 5, hypothetically, and we don't know yet what's going to happen. But you see, when you look through it all and you really try to understand why would they do that? The economy is not in a robust situation. I know people right now, I mean, what is today? January 22nd. Yeah. We're set new highs in the markets. The stock market, the S&P, they're all making new highs. Everybody's rallying over there in Wall Street. It's all smoke and mirrors, folks. It's not real. The market is so overpriced fundamentally that if anyone's putting money in the indexes, you're literally playing, it's Rochambeau. It's all it is. You are literally gambling at a speculative level that I don't think you understand. Yeah. But hey, so be it. Everybody loves to follow, the excitement, and everybody loves the FOMO, the fear of missing out. But I'm running the opposite way, man. I have no money in the markets. I have short positions on the S&P 500, which might be a bit premature, but I can lose that money. It's okay. And if you're ever going to take speculative positions, folks, do it with money you can afford to lose. It doesn't change your livelihood. It doesn't not put diapers on your kids and food on the table. That, my short positions. But I've been running into treasury bonds. I've got a big long-term treasury bond portfolio I've been building because I understand how they work in relation to interest rates. If the Fed does decrease rates, I make a ton of money. Because as the rates go down, the price of my bonds, which I've been buying my bonds when the interest rates have been going up. So I just want you to think of an X, folks. Interest rates go up, the price of long-term bonds goes down, treasuries specifically. So we'll just focus on government treasuries. But then when the rates go down, the price of my bonds goes up. So when do you want to buy? You want to buy low. And when do you want to sell? You want to sell high. So if the Fed does lower rates, I think that's going to be a really good thing for anybody that took any of the videos that I did teaching them treasury bonds and applied that knowledge. And I'll certainly be a happy man about it. But in there is chaos. Here's the thing. Folks, I want to be clear about this. This is strictly my opinion. Okay. It holds no water. There's no real relevance behind this, except for I've been doing this for well over 20 years. And I try to foresee a little bit more than just what Jerome says. So if the Fed is saying they're thinking about decreasing rates, I start to think, why? Okay, we're in an election year. It's going to be a very controversial election, to say the least. I mean, DeSantis just, pulled out. Vivek just pulled out. I mean, Democrats,
not voting for Nikki Haley?
They can't figure out who is running on the Democratic side. Like they don't have a strong contender outside of Biden. Yeah. Which sometimes he can get out of his mouth what he wants to say. Sometimes he can't. So it's the facts. But the whole thing I'm trying to get at is you've got a lot of things happening in 2024. None of them really sit there and say that this is going to be a robust economy, that things are just going to be all good. Matter of fact, leading indicators, if you really want the truth, you want to know where we're going, just look at leading indicators. Look at logistics. Look at shipping containers from China to the U.S. The price is way down. Look at box orders, like cardboard box orders for future box orders. Way down. So why would containers be down? Why would box orders be down? Why would companies like banks be predicting lower sales expectations and lower forecasts? Folks, it's because we're on the other side of the coin now. Now we're going back down the other side. So the market's at an all-time high, okay? We're pushing new highs, higher highs, and everything is pointing that we're going lower. So please tell me what makes sense. Well, I'll tell you what makes sense. It makes sense that we probably will see a recession. See, the Fed is really good at controlling inflation. When inflation is going up, they're very good at controlling interest rate and monetary policy. But they've never, ever, ever, I think maybe one time, but they've never been able to pull off a soft landing. Every time they've tried combating inflation in the history, except for one time, and you can't even really count it, but I got to be factual here. The Fed has always drove us into a recession with their actions. Now, you could all be...
The Bernanke soft landing?
You remember that?
Mm-hmm. Yeah.
Yeah, so you can't tell me that we're going to soft land this thing. Mm-hmm. And you can see if they're lowering rates, they're probably doing that to try to get ahead, saying, hey, we're going to say we're going to lower rates, try to get the economy a little bit better position, make money cheaper when all these corporate debts start to mature and they come off the cliff, which is starting in 2024, 2025, 2026. So the Fed is thinking ahead. How do we prevent a massive fallout? Well, we get ahead of interest rates and we make it so that when all these corporations' debt matures, they're not going to mature at double what it was. Maybe it's a little softer hit. But I just don't see a soft landing this thing. Sorry, that was a mouthful, but it just pisses me off that everything is just smoke and mirrors right now.
What's crazy is I think the biggest thing is someone, whether you know a lot about what we're talking about or you know a little bit about what we're talking about, if you really listen in, the Fed is the problem. The Fed is playing God.
That's always been the problem, man.
They're playing God to a free market. Like even we didn't have boom bust cycles until the Fed, they really had free reign to, when the Fed first came to, well, there was two different Feds, so to speak, when it comes to America. A lot of people don't realize that we actually had a Federal Reserve before it got shut down by Harriet. He's
what
on
was
that
called? The United Bank of the U.S. or something?
Yeah, he's on a $20 bill. What's his name? Andrew Jackson. Jackson shut down the first Federal Reserve that we had. We had a second Federal Reserve that came around, and that's the one that we're currently dealing with right now. And Dwight D. Eisenhower, one of our presidents, was telling us he actually tried to go back and get rid of the second Fed that was started, and he didn't have success with that. But he was saying some of the same things that we're seeing now is that it steals from the wealth of future generations. All the Fed is doing is it's a private corporation that is buying things in bulk before the general population can buy it. We're then buying those things back from the Fed with interest, and more importantly is they can create inflation while doing this as well. So if I create inflation, you work harder. I think that's why Rich Dad Poor Dad is so important. He's saying the rich don't work for money. Why? Because to work for money is you're literally doing the opposite of what it would be to actually become wealthy, because dollars are going to forever devalue themselves because it's a currency that can be controlled and manipulated by a centralized party. That's why Bitcoin is so important. Bitcoin is important because it is a decentralized technology, blockchain being that technology. It's not owned or operated by one entity or person. And then from there, it also is strictly math. So it's not favoritism. It can't be emotions involved. It's strictly math. And it allows somewhat anonymous payments because the blockchain can track, transactions. So it's somewhat anonymous. It can be peer-to-peer, or it could be even from a business to an individual. The whole point is Bitcoin, what we're talking about in terms of becoming our own bank, all these different solutions that we're coming up with are all solutions to problems that the Fed created. That's what's so crazy is that if I'm a big follower of Mike Maloney. I don't know if you're familiar with him at all, but
absolutely.
Oh yeah, Mike Maloney's my guy, man, and he has his he's always, and Ron Paul. He wrote the book In the Fed. If I was ever going to vote for a politician, it would be Ron Paul, and it's crazy. I think that what you were saying is so important. Like we call it the bullwhip effect. So by the time you actually, you swing it, and by the time it actually hits the bull, it's a little bit of time in between there. And that's what we're witnessing right now inside the markets versus the economy. People are living off of yesterday's high. Essentially, they think that, and especially with the potential rate decreases, people don't understand that is only reason why you see the markets run up with the rate decreases. It's because it's that bullwhip effect. It takes time before it kicks in. It's a lagging effect. Rate decreases actually signal a recession or possibly even a depression, Because if you go back and you look at it, every time the Fed has cut rates, a recession or depression followed shortly
Every
after.
single time.
Every single time.
Every single time.
Like literally 100% of the time. It just took time for that to actually happen. And so I think people have to prepare themselves right now. If you have liquidity, if you're becoming your own banker, one of the great things about becoming your own banker is, I tell people all the time, it forces you to actually save dollars. For the first time in your life, you're actually saving some cash. And the great thing about it is, with becoming your own banker, if you realistically cannot save cash without touching it, then you can't tell. Like, people have this mindset, if I go try to become my own banker, I get this policy or whatever the case is, what if I couldn't afford it or whatever the case is? Here's my biggest question to you. If you, let's say you're trying to save $500 a month, right? And you're trying to save it in a regular savings account. Let's say infinite banking doesn't exist. If you're telling me that you have the opportunity to save $500 a month and still spend money, you can't do that, but you can save $500 and not spend any of it. That's irrational. Realistically, the reason why I love becoming my own bank is because I can save my dollars and I can still spend at the same time. It automatically produces liquidity. More important is guaranteed liquidity that is not tied to something else. So you have automatic, collateralization without it being like, okay, well, your credit score is it's only a 600, so we can't let you get. If I have $10,000 in my policy, I can pull out $10,000, regardless of my credit score or whatever the case is. And people do not understand that when these interest rates change, we're not talking about, like you were saying, the interest rate on your house or your car or whatever. We're talking about the interest rates on bonds. When the interest rates change on debt, that is debt that, whether it's private, corporate debt, which is actually twice as much as the national debt, that's something that a lot of people should be scared about. They don't really understand that. The corporate debt is horrible right now. The national debt is debt that we're in as a nation, but either way it goes, we're talking about the interest that's being paid on debt, okay? And because we're running such large deficits, individuals have to understand that you have to have liquidity, or you have to have something to actually buy the dip or buy the crash. So like when you were talking about, you're excited. You're like, yeah, I'm out the game. I'm on the side. I'm waiting to see what's going to happen because I'm going to get back in this market at some point in time. But I think individuals, the reason why they have that fear of missing out is because they don't have a plan to actually be able to take advantage of some kind of a crash. So the only way they benefit is by trying to chase the highs, because they don't have a plan when it comes to, like you were saying, I'm going to get out of the market. I'm going to kind of wait on the side and see what happens. A lot of people are scared of investing, or they don't want to make those direct investments. But in reality, I think what it is you just need to have a better understanding of the rules of the game. The rules of the game is there's news for the classes and there's news for the masses. News for the classes is, I was telling individuals when the Bitcoin ETF came out, which, to break it down a little bit, not stay on it too long, it was a spot Bitcoin ETF, which means that the underlying asset, Bitcoin, has to be purchased anytime somebody actually buys a share of that ETF. Similar to how they have the gold and the silver ETFs, which I'm pretty sure it's been proven multiple times that it's not an actual ratio. So it's going to be the same thing with Bitcoin. Trust me, Wall Street, once they get their hands on something, it's going to be manipulated. If there's only 21 million Bitcoin, there's going to be double, triple, quadruple that many shares being sold of Bitcoin, because it's paper. That's the thing. You're buying a paper. You don't actually have the asset itself. You're buying a paper. So a piece of paper that says I own something. Why would I buy paper shares of silver? I own real silver. Why would I own paper shares of gold? I want to own real gold. Same thing with Bitcoin. I can go buy my own spot Bitcoin straight off of an exchange, but then you have to deal with self-custody, and that is the reason why the Bitcoin ETFs are going to be so important, because mom, pop, grandma, grandpa, they're not trying to go through figuring out, how do I create an account? How do I buy my Bitcoin? How do I keep it safe? No, I can just log into Fidelity. I can get some Bitcoin through the Bitcoin ETF, and boom, all my troubles are gone. It's right there with my stocks and everything else. So this is huge in terms of liquidity and what's going to be coming into the crypto market. But moving on past that, like I said, is to understand there's news for the classes and there's news for the masses. The masses are hearing that something big is coming. A lot of money is going to be getting made, in the FOMO, the fear of missing out. Now everybody's rushing in. Bitcoin was almost to $50,000. It actually peaked up to right around 50,000 and then had a huge drop. Now, earlier I was looking, it actually dropped below $40,000. So you're talking about a 10% drop, all in between that time of, hey, this is really great. You can't miss out on this. You got to get in the Bitcoin ETF, to now we're a week later, it's down $10,000 from where it was. What do you think is happening? You're being manipulated by the news. And it's the same thing like what you're talking about, Chris, is, understanding the lagging effect, understanding what's really happening. And people the markets, we have this saying, don't fight the Fed. But the reality is the Fed doesn't belong inside the market anyways. That's how a free market really works, is we can come up with our own prices, and therefore you don't have inflation. But go ahead. I'm sorry, man.
But we just don't live in Austrian economics anymore, where you just let the market ebb and flow. And
they got Keynesian economics,
modern monetary theory economics, which followed the Keynesian economics. And I may be saying that a little wrong. Keynesian, and then modern monetary, which is basically just print your way out of everything.
So what do you think about, so with that being said, what do you think about the component of, and we spoke to a little bit, but what do you think about the component of like the BRICS and what they're doing with a potential gold-backed currency?
Well, it makes all the sense in the world. I mean, the BRICS, obviously, they're trying to break the U.S. dollar. I mean, the U.S. dollar is the currency oil is valued in. It's the almighty dollar. I mean, you can't say anything more. And the dollar, just to be clear, isn't going anywhere anytime soon. Contrary to what you're hearing in the BRICS and the media, the dollar isn't going to go away that easy. The Fed's number one job of the Fed is to protect the dollar, and they will at any cost, war included.
Oh, yeah, military-industrial complex.
If you can't see where we're headed with that, like you're clearly not opening your eyes. I mean, BRICS is going to try to do it. I mean, but China's currency has no real relevance. I mean, the Bank of China, it just isn't a stable enough currency yet. You got India, who's got the population, so that's a huge one. You got Russia, who's got the resources with the oil, but it's going to take time. I guess that's the only thing I would say.
Yeah,
it's going to take time, and it will be challenged and met with severe force by the U.S. And listen, I'm not sitting here and saying that's good. I mean, you shouldn't fight wars just to protect a currency, but there's a lot more. There's a lot of geopolitical stuff going on, which you can see over in the Red Sea. You can see with cargo ships getting attacked. I mean, this is all geopolitics. Mm-hmm. And if you understand geopolitics, there's a great book. It's called The End of the World is Just the Beginning. It's a fantastic book if you want to understand geopolitics. I know it sounds dry and boring, but if you really want to feel good about living in the greatest country on earth, the land of the free, the United States of America, read that book. You couldn't be in a better place in the world than the United States. Number one, from a resource standpoint, from a Navy standpoint, we can protect our waterways. We can protect our shipping lanes. We have more land here that can be inhabited. There's so many perks of being here, fresh water. But getting off the topic with it, and I'll digress in just 1 second, but like when you really look at everything that's happening, the one thing that I think scares me more than anything else, and I'm not old, but I'm not young. I'm 46. I see where we're at. Millennials, Gen Z, they've never seen a recession. They don't even know what one feels like. They don't even know the impact. They've never really been told or taught or even shown what a down market could potentially even look like. So all they know is upside. So it makes perfect sense that the general sentiment, the general emotional-based investing decisions that these genres are trading or playing into is one of, okay, take more risk, make more money. Let's get rich quick. FOMO, because they don't know the other side, which is, I got to forewarn this entire audience. Like, if you're listening to this, you need to be concerned, because this is going to be one of two things for every single person listening to this. This is going to be the greatest opportunity of your life, or this is going to be one of the biggest follies that you'll learn some really important lessons. And listen, in those lessons, you will learn what you need to learn. And maybe that's what's got to happen.
Oh, yeah.
But when people rush into things, I mean, look at Bitcoin. Like, I am not, for disclaimer, I'm not a Bitcoin expert. I've read Inventing Bitcoin. I've worked with coaches on Bitcoin trying to understand it. I understand the problem Bitcoin solves. I understand the problem Ethereum solves. And I understand largely blockchain. I think blockchain is that's the future. No ifs, ands, or buts about it.
Absolutely.
Blockchain is the baseline for everything in the future. And if you can't see that, then you're just being ignorant, to be quite honest. But it doesn't mean that it's the right thing for you to invest in. just because Bitcoin could be the future, just because blockchain could be the future, it doesn't mean that that's where you put all your money. You don't know, like, and understand it. You should only invest in things that you know, like, and understand. Like, I fully understand real estate, at least certain aspects of the real estate market. So I lend money on real estate. That's because I understand it. I invest in treasury bonds because I really deeply understand them and like them and know them. But you know what I don't invest much in? Bitcoin and Ethereum. I do dollar cost averaging every bi-weekly. I put a little bit in. And then when the market goes up, like it just recently did, I dump. And then I wait for it to go back down. I just dollar cost average back down. And if it gets low enough, I put big chunks in. And then when it goes up, I sell. And people think I'm crazy. Yeah, listen, I'm not trying to time the market. I'm just doing what I did when I was a trader. I'm just doing what I did when I was an advisor. Like, I just know how to do it. And I feel comfortable because it's something I know, like, and understand. And I just think so many people are investing in anything that somebody tells them is going to make them a bunch of money. And that's the perfect way to lose money, because it violates the third or the fourth law of wealth, which is be realistic and never get greedy. And there's too much greed still. But here's what's going to happen, man. I mean, you can see the writing on the wall. You can see it. It's clear as day. The reason the economy still feels so strong, the reason everybody feels like they have money, the reason the markets are where they're at right now, like, take away the manipulation and the speculation, but is because you're employed. That's it.
Yeah, employment.
If there's a three-legged stool, that's the final leg.
Employment hasn't fell off, and you know that's the.
But it is. It's falling. You're just not hearing about it.
Right?
The reporting numbers they want you to see. They're reporting government and healthcare numbers. They're not reporting the whole picture. They are, but they're only giving you what they want you to see. I'm telling you, employment will give way. I don't know if it'll be end of this year. If I had to say, when is all this stuff going to start showing its ugly face? It's pretty simple. End of the year. End of 2024.
Yeah, probably Q4. And you have to keep in mind, too, like, just to talk to the manipulation, the Bitcoin halving is going to come in, I think it should be I think it's late August or the beginning part of September is when we'll get that hash rate cut. So the hash rate, yep. Yeah, so the hash rate is being cut in half. It's not HALF as most people think it is. It's actually HALVING. It's going to be a halving that's going to be happening, okay? So essentially what's going to happen with Bitcoin is good for the price because it's becoming even more of a scarce asset because less of it can be produced into the future. And it takes
more energy to mine
exactly,
more too.
And it has a direct an amount that we know, an exact amount that it's going to stop at for now.
Until we reach derivatives.
See, that's the thing is that
they're going there, man. They're already going there.
Is that Bitcoin futures? That is derivatives. If you want to look at it in that way, spot 100%. Bitcoin ETF is the same exact thing. I think when we're looking at so you have so we have the halving coming up. Same thing. News for the classes, news for the masses. Everybody and their mom is going to be trying to get into Bitcoin because the halving is coming. Now, notice like what you were saying, Chris. I think employment is going to probably fall off towards the end of the year. And I think the same thing. If you look at Tesla, Amazon, Apple, all these big corporations, they're already talking about how they're laying people off. Why? What is Bitcoin? It is technology, blockchain technology. Anybody that thinks that this technology is not coming to take your job and potentially replace you, you're not seeing what's happening. Technology helps inflation keep going. It's good. Okay, one of the things we studied, I know when I was doing economics in college, and one of the things we had to write a paper on is how the effects of technology can actually help fight inflation. Why? Because it makes things more efficient. The same thing with cryptocurrency and the whole CBDC thing. What is it talking about? It's talking about frictionless payments. If we can save money when it comes to peer-to-peer transactions or globalized transactions or whatever the case is, from one bank to another bank, intermediary to another intermediary, if we can cut out some of those intermediaries and make it to where it's from one entity to another entity, what's going to happen is that's going to help while the price of things are going up. So if the price of things are going up, but you also are saving money at the same time. So like inflation is crazy because if you notice, it has its effects on different things in different sectors at different times. So for an example, a flat screen TV right now is probably the best price you could ever get it. You want to get a laptop, you want to get anything electronic wise, it's the best time ever to buy something like that. Now look at the price of food. You see what I'm saying? And look at how it's more affordable for you to get something that you don't really need but you want, but the things that you need are going up extremely in price. Inflation has those kinds of effects. So at the end of the
Absolutely.
day, the game is being rigged against you, and they're going to make this game work regardless. They don't care if you don't have a job. They're willing to give you universal basic income. That's why the CBDCs have to happen. Even with Trump coming out, I would never let a CBDC happen. Trump understands that when he said that, the people at home, most individuals watching this even now, you don't have a clue how a CBDC actually works. You don't know what it really is. So if he says he's not going to let it happen,
I don't see how he could not let it happen.
Exactly.
I mean, he doesn't control that.
Exactly. Because what's going to happen is, same thing with DeSantis saying, "Oh, well, we won't let a CBDC in Florida." The whole point is they're not going to come out and say, "Hey, we got this new central bank digital currency." No, they're going to say, "Hey, we got a way for you to send money to grandma in 2 seconds. We're going to speed up payments. We're going to make it
Fed now."
Yeah, so Fed now, exactly right. There, we're going to speed up payments. ISO 2022. We're going to make it. That's the new messaging platform for Swift. So even when it comes to sending global payments, we're going to speed it up. We're going to change how things are done. There's going to be so many benefits that you don't understand, because when you think about CBDC, all you're thinking is cashless society and everybody's controlled by the government. You can't do anything. Big Brother's watching. And that's true, but that's also, once again, a lagging effect. That's not how it's going to start out. It's going to start out by being everything you could ever want inside of a financial system. Oh my gosh, this is great. I save money. I can send payments faster, so on and so forth. And then long and behold, down the road, you'd be like, oh wow, we've been operating on CBDC this whole entire time. And I think that's what gives crypto value. But understand what's happening, just like what Chris was saying with the jobs going to fall off a cliff, and I agree to that as well. What's happening is, at the time where it's going to see where you have to get into the market, you need to take advantage of it. That's going to be the time where it's going to be the most detriment to you if you were to try to do that. So I think that's where we're at with Bitcoin and what's happening. What do you think about some of the things I just said, Chris?
Yeah, no, I agree with it all. I mean, like I said, I'm not a Bitcoin expert. If somebody were to say, do I think Bitcoin's a good investment? I say, yeah, but it's a good investment for a long time into the future. And I think there's going to be a lot of volatility, a lot of pain to be shed still.
Oh, absolutely.
I think it's still very early. If you're an early adopter, you got money you can afford to lose. It's a great speculative investment, I think, for the average person. Them thinking they're going to get rich in Bitcoin is going to end up the same way that it did before, even at this stage, because we're still very early on and there's still a lot of manipulation being done. Mm-hmm. And I think the best way to do it is just the age-old dollar cost averaging. Just set it, forget it, just keep building a position, believe in it, understand it, read the books Inventing Bitcoin, read other books, learn what it is you're investing in and what problem it solves. And you know, when it comes to CBDC, I mean, listen, that Trump can't stop it. DeSantis can't stop that. I mean, they can say that, but that's just, it's like so many politicians, you know, they're buying votes and both sides do it. So you can't sit there and say, oh, I knew they were doing that. Listen, they all do that. Could Trump cut payroll taxes? Absolutely. That would probably be something he could push through and get done. But CBDC is kind of like the big fish, right? You know, the Fed is the big problem. You know, if you read The Creature from Jekyll Island, you'll understand a little bit more about what that is.
Crazy. That I was going to mention it earlier. It ties in how the Titanic has a connection and a correlation to how the Fed was 100%. Actually created. Yes, that's crazy. Yeah. But
I think, you know, getting away from, you know, people love to quantify like something tangible. I mean, first off, Bitcoin. Okay, there's no intrinsic value. So for me, like as an investment. Is an investment, it's not an investment that I would go deep into. There's no fundamentals like other investments that I like. So for me, it checks off two boxes that are just, they're no-goes. Like I said, I swing trade it, but that's probably my future. And will I give up some wealth because of that? Yeah. But you know what? I stay in my lane. And I think that's the biggest lesson people need to learn. It's like, listen, like people are always asking me, what's the secret to success? You know, and I always tell them, you want to know the real secret to success? Listen to The Strangest Secret in the World by Earl Nightingale. That's the secret to success. It's a worthy idea that you plant in your mind, that you think about and you work at every single day of your life, and you never lose sight of it, no matter what people say. And the second secret to success is never conforming to what somebody else's ideas are. Don't conform to failed ideas from somebody else because they say your ideas are shit. Your ideas are what will make you successful, but you got to work at them every day. You got to go after them every day. You got to literally, there's not one person that's ever created something great that's changed the world that wasn't shit on, that wasn't looked down on, that wasn't, nailed to a cross or beaten or killed or burned at a stake. Think about it. Every single one of them. Edison with the light bulb. Everybody said it would never happen. The typewriter, the sewing machine, the steamships, like every one of them were met with massive resistance. Your journey in your life will be met with massive resistance. Mine has been. Ours has been. We are out there teaching people one of the most fundamental basic things every single person should learn in grade school. My daughter learns this, and it is banking 101. It is how to be the bank, how to mimic what a bank does, how to take back the banking functions in your life. There's nothing complicated at all about what we do teaching people to become the bank.
Fundamental thing is, we say this to a lot of people. People are always going out there trying to make the biggest, baddest returns. People tell them about this crazy investment, Bitcoin, Ethereum, shit coins, all that. But the safest investment you'll ever make is not an investment at all. It's actually knowledge. And let me prove it to you. So one of the things we teach with being your own bank, all of us teach this, is how to build wealth through your own debts and expenses. Riddle me this. Your credit cards. What's the interest rate on your credit cards? I mean, what are the average interest rates on the record-setting $1 trillion+ in credit cards?
I think it's like 30% right now.
Yeah, it's like 29%, 25, 29. If you're lucky, you're at like 15. But like all of those, 15, 20, 29, those are strong returns. You'd love to get those kind of returns in Bitcoin. You'd love to get those returns in stocks. You don't need to take any risk. All you need to do is change your mind and how money works. So take the money that you would invest in Bitcoin, in stocks, in indexes, whatever you would, and then take that and pay off your lowest balanced credit card. Take the check that you used to write to the credit card and write that check back to yourself. Now, just put it in a bank account for now, okay? I just want you to think of this as a circle. So we take the money out of the bank, we pay off the credit card. We take the monthly check you used to give the credit card, we put it back in your bank account. What was your return on that transaction? Well, how much was the credit card's interest rate?
Yeah, whatever
20%?
Whatever the credit card company was going to make
you just recaptured 20%. Now, change where that money goes. Instead of putting it into somebody else's bank, put it into a specially designed whole life policy where you can still earn uninterrupted compounding interest while using the money. As you alluded, you can save and spend. So now you got a place where you can put that money to pay off those credit cards, and you can use that money, but you still earn interest on the original money. You pay the credit card off. You recapture the payment for the credit card every month. That's 20% plus the internal rate of return you earned on the whole life. Rinse and repeat that on all your debts. Pay them all off, lowest to highest. Then pay your car off. Then at the end, pay your mortgage off if you want. People are like, oh, that's crazy. My mortgage is 3%. No, it's not. You don't understand the velocity of money. Your mortgage, the amortization schedule means that every payment you give to the bank in the first 7 years is about 70 to 80%. Is going to interest. You think you're paying 3%?
You don't pay the interest.
No, you're paying double-digit returns to the bank in those early years. So people always catch me and try to say, why should I pay off my house? It's 3%. Because that is smart. But it's just like that's such a simple way to think and simple way to earn a return. Money you're giving away, just pull it back. Right? Plug the holes in the boat so your boat's more efficient. Make your financial household more efficient. And that's what we teach. Take back control by being the bank. Change where your money goes first and add one step, which is the infinite banking concepts. And I know we didn't go into it here, but it's just, to me, maybe I'm so far down the rabbit hole, Robert, that I can't come back out. And sometimes it's very difficult for me to get into conversations with people, that just don't want to learn something new, that just want to think everything's hunky and dory. I'm putting it into the 401k. I'll just keep saving in the bank account. I hate my job.
Invest the difference.
Yeah, buy term, invest the difference.
That's their favorite. That's why I know we're going to have a market washout, because I see so many people, especially on TikTok. Oh, no. I'm like, dude, how are you a financial genius, but you're on TikTok and your For You page is so that you can get financial education. So therefore, you already know there's something that you're looking for that you just don't know, right? And it kills me because, like, I tell people all the time, you have to give me something original, like buy term, invest the difference. I could have found that out anywhere. Give me something more original. When I heard it become your own bank, I was like, that's different. That's something I need to learn more about. That's something interesting. They're not talking about making a bunch of money and working harder on your job and starting a business, making some kind of investment. They're also not talking about, I got to go live under a rock. I can't spend any money. They're not trying to Dave Ramsey me to death or whatever. So I was like, yeah, this is good. I like the idea of becoming my own bank because to me this makes the most amount of sense. It's kind of playing the middle of it's not too hot, it's not too cold. It's right there. It's just right. It's what you need to build a financial foundation. And now you're in a position to make investments when the market goes down and so on and so forth. And I think like you were saying, man, I I think we're in for some turbulent times. And I think we're gonna have a market wipeout, not before it gives everybody this high that you just cannot imagine. Markets do not go down inside of disbelief. Markets go up. Markets go down inside of euphoria. Markets, that's how bubbles pop. Bubbles pop when when you see the person that you never thought would invest, or they're always cynical, or whatever the case is. When my grandma, my mom, and my dad, and everybody's asking me, how do I buy Bitcoin? How do I get into stocks? How do I do this? I know that's a signal. It's time to get out. It's time to sell because everybody has this idea, just like you were saying, especially for younger generations. We've never seen a market crash. We don't understand what it's like to be inside of a downturn where every time you put a dollar in, that dollar's decreasing inside of percentages. And it takes a long extended period of time for the market to turn back around and go back up. We need to go through that cycle. And I think that's what we're about to go through now. We're going to probably have a blow off top inside of the index for sure. If you look at stocks, it's clear as day. Anybody that understands any kind of chart analysis, we're in for a blow off top right now. It's only a matter of time before this thing.
Days.
I would give it. The market is so irrational. I'd probably give it maybe 2 or 3 weeks. We're going to see a huge drop. And another thing too is that war, especially war. Here's where we're going to see some of the decoupling of different asset classes. Gold, silver, and even cryptocurrencies are going to love the war narrative. Stocks are not. Stocks are not going to like the war narrative. I think that's what we're going to see. It's not going to be all falls at one time. I think that we might actually see for the first time, and we've seen this before, but I think we're really going to see it for the first time in history where things drop by sector. So like oil's going down right now. Oil's going to go back up. I think oil's going to probably hit like $125 a barrel or something. It's going to go back up. So you're going to see stocks drop. Then you're going to see the cryptocurrencies will have their blow off top. They're going to crash. Bitcoin might go all the way down to maybe even $5,000 a coin.
I think so. I think 5 to 10 all day long.
Yeah, you're going to see the next industry do it. It's this whole energy sector and the solar and oh my gosh, and the 5G and all that. That's going to have its blow off top, hit the floor. Everything's going to hit the floor. It's just not going to happen at the same time. If you're a better investor, and on this channel, that's what we're talking about. That's why I'm listening to Chris. He has a lot of different. Not only was he like literally a financial advisor, he just has a well-rounded education in terms of finance. I need to know more, and I'm sure if you're watching this right now, you need to know more. You want to ride these waves. If you ride these waves, I'm telling you, just like you said, Chris, this is going to be. And I tell people all the time, I understand your fear. I understand you want to take risks and you want to be smart. This is the time where you're going to look back, and your kids and grandkids and stuff, they're going to ask you, where were you when this happened? Like the whole, you remember the whole, where were you on 9/11?
Yeah.
That's what this is going to be one of those times. Where were you in 2024 when the stock market peaked at euphoria levels? Bitcoin almost went to $100,000 and so on and so forth. Where were you? I was afraid out the market or whatever. And that's the thing, like even what you were saying, it's okay to be on the side. You might want to catch the downside, right? You might want to catch the crash. But the whole point is you can actually do a little bit of both. What you're doing with being inside of treasury bills, you're still dollar cost averaging into other assets as well. And that's why I'm a big component of actually, if I wasn't running a little bit behind to come here, I was going to stop and get me some silver. I'm a huge silver stacker. And the reason being is because I like gold too, but I think silver, it has two different plays. You have it's an industrial metal and it's a monetary metal. Gold is really more so just a monetary metal or like jewelry and so on and so forth, but it's too expensive to be used in an industrial setting. You're not going to use gold it's the greatest conductor of electricity, but right behind it is silver, right? I'm not going to use something that's $2,000 an ounce when I can use something that's $25 an ounce. That's what Elon Musk wants. That's what all these other guys that's in the industry of energy, they want that silver. They don't want to pay those high. you can't use gold because it's not going to make sense in certain aspects of whatever it is you're trying to accomplish. It's going to make the Tesla, way too expensive to put gold on the inside of that. It's not going to be as expensive. Silver is on the inside of our iPhones right now. Silver is on the inside of these electric vehicles right now, and it's inexpensive. So, yeah, man, I know I just kind of I just went off, but I'm feeling exactly where you're coming from, where it's like something big is coming, something major is going to happen, and you're one of the few people that I talk to where you're trying to see both sides of the coin, where it's like, yeah, this is going to be really, really bad, and this is also going to be really, really good, and you should do both. You should try to protect yourself and be safe, but you also need to be investing and taking some kind of a risk inside this scenario, because that is where it's not saying that you have to take a risk to necessarily get a gain. What it's more so saying is you need to be in a position to have arbitrage against that kind of a risk. So if you already know, like, people see gold as an investment, oh, well, the price of gold could go down and so on and so forth. But what do we know? We know for a fact the dollar is going to get printed into infinity and beyond, right? Over the long term, gold makes sense. Mm-hmm. So it's just one of those things where you got to know what you're buying, like you said, be comfortable with it, and know why and how it makes sense to you. But anything else you want to add to that before we wrap it up, man?
No, I think that's it. I mean, listen, diversification is always the key. Like when I look at my investment strategy, I have 0 stocks, 0. But I am still very diversified. I lend a lot of money. So I am a private lender, lend a lot of money on a lot of different risk, type things, real estate specifically, all collateral backed. And, it's wide and far, different development projects, different apartment complexes, single family flips, none of which I'm doing. I lend to them in a first lien position. Then I've got my treasury bond portfolio. I've got a couple shorts, which are derivatives. And outside of that, I also stock up on silver every month. A load of silver shows up. I've got a subscription. I don't even think about it. And then my biweekly dollar cost averaging into Bitcoin and Ethereum, which I just swing trade. And, so I think, when you're really thinking about it, like if I look at each one of those assets that I just mentioned, I know, I like, and I understand every single one of them. Too many people are investing in things that they do not know, like, and understand, violating the third law of wealth, which is protect your wealth. You can't protect your wealth if you invest in things you don't understand. That is the first folly of any investor. It's why financial advisors exist. You think they're smarter than you. You think that maybe they are in some capacity, but you give them all the control of your money, and they typically are investing in things that they don't know, like, and understand in today's world. Yeah. It's broken. 16 years I served. I always say that. 16 years. and I know too much. And I know it's a broken model, a flawed model. Exactly. And a lot of people, I've seen way too much. And a lot of people are going to get hurt really bad this time. So folks, just remember, it's not about what you don't know. It's about what you think you know that just ain't so. So don't ever stop learning, and plant that worthy idea in your head. And that's all I got to say on that.
Hey, before I let you go, man, I just wanted to put this in here. I'm super interested to see how these IULs play out in the next 10 years.
They won't.
Chris Kirk.
That's simple. Exactly, they won't play out.
Chris Kirkpatrick, he has the whole challenge, and
nobody's challenged him yet.
Yeah, it's funny to me because I'm like, if
I doubled it. It's $5,000 now. He's $2,500. I'll put another $2,500 in.
That's what I'm saying. Do I need to put some money on it too? Because
let's get it up to 10 grand.
I'm interested to see. Like, I'm legitimately want to see. I'm like, if you have it, this is an opportunity to come out and be like, hey, man, this thing worked for me. And when this market goes down, oh my gosh, I think the majority of people on your schedule are going to be like, I got an IUL. I'm trying to get a whole life policy designed for things.
I hear it all the time.
That's going to be the majority of people on your schedule.
They're locked up in surrender charges, so they can't get out of them. And I won't replace it in a surrender because it's just you're losing too much money. I mean, people get into these things with no exit out of them. Like, they're in and they can't get out without a massive, massive loss. And that's the sickest thing. Believe me, the regulators are coming down on them. They're already going in. I don't know how many regs they've done on these things, but it's going to be chaos when this whole thing lets loose, when the derivatives that are backing these things don't perform or get too costly to keep this whole thing afloat. It's all going to come crashing down, and there's going to be arbitration cases and lawsuits everywhere for all these gurus you see on TikTok pushing IULs. Mark my words, the day will come.
Yeah, it's gonna come, because the insurance, at the end of the day, what's happening is no different from what you were saying. Well, why do we want to become our own bank? We want more control over our money. Yep. An index universal life policy, and I've debated this exact thing, is that it's essentially no different than you turning over and getting a 401k or something. You're turning over control of your money to the insurance company, and it's not that the insurance company are bad people, they're not trustworthy, whatever the case is. They're a business, and realistically, what are they going to do? They're going to protect themselves first. You're the one that said you want this risk. We could have gave you a guaranteed contract. You could have paid for it, so on and so forth. You wanted us to take your money, expose you to a level of risk while still protecting you from the risk at the same time. That's impossible. It's like you can't be in water and not be wet. You see what I'm saying? It has to be, there's risk in there. What is the risk? The risk is the opportunity cost. They're saying, hey, instead of us guaranteeing you cash value, we'll let you gamble your cash value. Potentially you'll end up with more, or maybe you end up with less, but that's all on you. What do you think about that? And people are saying, yeah, man, instead of giving me that guaranteed cash value that I know I can take, and like the surrender charges out of a whole life policy, if I want to get out of my whole life policy for whatever reason, I can actually take the cash value with me. Big differences here. It's huge differences here.
It makes sense for the insurance industry. I mean, it shifts all the risk with an IUL is put on the client, and very little risk is put on the insurance company. I mean, mortality risk, which they can handle. In a whole life, all the risk is taken off of the client and put onto the insurance company. Hence why insurance companies don't really advertise whole life, don't push whole life, don't train their sales forces to sell whole life. They train them to sell the most profitable product in the war chest, and that is term insurance and IUL. People don't understand why they've never heard of whole life or why their advisor isn't talking to them about it. It's because of that.
Yeah, and that's why you don't have commercials. Hey, come on down here, be your own bank. No, it's not. They're not interested in that. Well, Chris, man, thanks so much for coming on. I don't want to hold you up anymore. I know you got to get to the family. Much blessings to you, man. I hope you continue to be prosperous in what you're doing. Stay safe out there. I know it's cold. It has to be freezing cold in Buffalo, New York, because it's been getting pretty cold down here. So thanks for coming on once again, man. I look forward to doing it again. We're speaking the same language. Like I said, it's not too many people I run across where it's like, you buy silver too? You think the stocks are going to hit the floor too? So it's like, it's amazing to have you on, and I'm super excited to just be learning from you. And I know that the content, that when it comes out, it's going to be great for the individuals that take it in and consume it as well. So thanks so much for being on, guys. Better investments equals a better future. And I'll see you guys in the next video.